Gold certainly surging as of late, but is gold a better investment than stocks on a long-term basis? We're going to explore this question in this video. So you can see gold here over the last couple weeks has been up about $500 from under 3,000 to over $3,500. It's been pulling back the last couple of sections, probably going to consolidate that big run up here. Gold is a hated asset by a lot of people. Um, I'm not sure why. Maybe because it's sort of the king that's on top still. It's sort of the competition for stocks. It's seen as the anti-stock trade. So we'll look at some sort of famous derogatory quotes here about gold. John Maynard Keynes, the famous economist, called the gold standard a barbarous relic. So he didn't really call gold a barbarous relic, more the gold standard. He did say that it did have a role in the financial system, sort of as an emergency role only, though. Um, I'll let you guess who said this one. Gold would be way down on my list as a store of value. I would much prefer owning 100 acres of land or an apartment house or an index fund. I don't see gold as a store of value. The truth is, it hasn't worked very well. So if you're still wondering who said that, that was Warren Buffett who said that. I think that Buffett was just pointing out that gold doesn't produce any cash flow or profits, whereas those other assets do produce cash flow or have the potential, at least, to produce cash flow. So the last one here, Jason Zweig, a financial journalist, seems to be the first person to call gold a pet rock in his infamous 2015 article, Let's Be Honest About It. It's a pet rock. So again, maybe a misunderstanding of gold's role as sort of a store of wealth, or maybe just the same thing, just an asset that just doesn't produce any cash flow, or is gold sort of seen as that king of investment that people are trying to take down? You know, I don't know. So we're going to look at whether gold, though, has been a better investment. Which one has had a better return, gold or the Dow? And so this is Richard Nixon. He is the president that cut the last tie from the dollar to gold when he closed the gold window in 1971, August 1971. So central banks at that time could redeem dollars for gold at $35 per ounce. You could speculate that they were getting too many redemption requests and did not have the gold to back it up. Maybe they just didn't want to give up their gold for dollars. I don't know. I'm just speculating here, but we're going to use that as our starting point to see if gold has outperformed stocks because there is no ties of the dollar and gold. And so gold was trading at $43 at the time of that discount window or the that gold window being closed, and the Dow was trading at 889 points. So the Dow has increased from that time 4,303%, whereas gold has increased 7,765%. So really, no contest here. Gold has absolutely smashed the performance of the Dow. So you think of the intellectual capital that goes into trying to get that Dow higher, and gold just kind of sits there and does nothing and has handily beaten the Dow since it's been severed completely from the dollar. So very humbling, um, I think, experiment here, I guess. We'll take a look at what's happening here recently with the gold to stock ratio. it has really surged and retested that high in 2020. So I think we're going to consolidate here. It looks like, again, down today. And I do think that there's a good chance, at least, that gold is going to break above this line and start really outperforming the stock market. All right, guys, that's it for now. Again, this is not financial advice. Please do your own research. Thanks for watching, and we'll see you in the next one.